The U-turn in monetary policy that the Federal Reserve made in recent weeks is probably one of the most important stories in financial markets right now. Let us quickly take a step back and see, how the situation developed. For most of 2018 and then especially also in the fourth quarter of last year, I think the market was really, getting concerned about the interest rate hikes and actually further interest rate hikes from the Federal Reserve in 2019. So overall tightening of monetary conditions. Now, as we know, fourth quarter was a very, very tough environment for equity markets. We've seen most major equity markets falling by 10% or more. So there was a bit of a crisis brewing, I think, in markets at the end of last year. And we've then seen this sharp reversal in monetary policies by the Federal Reserve, with them actually coming out, early January already, signaling to the market that, first of all, there are not going to be any further rate hikes in 2019. In the meantime, even signaling to the market that they might not continue to reduce the size of their balance sheet, which really is a sharp contrast to the story we had back in 2018. Why is this the most important development for financial markets? I think this monetary U-turn is going to have far-reaching implications in financial markets. One, I think it's going to have implication for currency markets because, remember, the rising US interest rates has been one of the key drivers of US dollar strength in the past few years. I think that is probably, going away now. Secondly, lower interest rates are, typically very supportive for equity markets. I think we've seen it in this first quarter already. We had this, impressive rebound in global markets. Third, the bond market, of course. I think when you have long-term yields falling from 3% or slightly above 3% at the end of last year to around 2.5%. So that's more than 0.5% within basically 3 months. This is a huge move in interest rates. And I think the fourth implication is going to be on commodity markets. Here, I think specifically precious metals markets. Usually one concern for precious metal markets is rising interest rates. But now I think with this sharp change that we're seeing in that, that should actually also become one of the main drivers for precious metals going forward, because I think the facts are on the table now. We're not going to see any interest rates or interest rate hikes in the US for the time being. We're probably pretty soon starting to talk about an expansion of the balance sheet of the Federal Reserve. So overall, we're probably looking at improving liquidity conditions in the market, and that should be big news for the market.